Oh man, so after a few strong days for Bitcoin, are we heading for the next leg up, or are we going to come crashing back down to reality, back to some of our lows? We're going to analyze charts, we're going to look for the key levels in the charts, so make sure you hit up the like button, don't forget to subscribe. As you can see guys, Bitcoin is getting a little bit of a cooling off, and this has got a lot of people wondering whether we're going to come crashing back down into this triangle, back down to the downside of this triangle, and potentially heading down to 15,000. Is that going to be the case? Well, for those of you who've been monitoring this with me successfully over the last few days, congratulations if you took this trade with me, because at the peak you're up 10%. Even where we're at right now, you're currently up about 6% on a spot trade on Bitcoin, the largest market cap cryptocurrency. So congratulations to you lot who took that trade with me here. I'm still in the position, and I'm going to let you know exactly what I'm waiting for and why I'm not exiting this position. Now, we can see the fit and greed index is sitting at 20. This is now increasing, right? As you get to some of these higher prices, as Bitcoin starts to pump. For those of you who are new to crypto, did you see the feeling? Did you see how people started reacting? Did you see how everybody's talking about this pump? Now, you guys know longer term, as in medium term, sorry, I'm still quite bearish. I think this is just a relief rally we're experiencing, but I still think there's a little bit more steam to go in this relief rally. I'm going to explain to you exactly why very, very shortly. Now, important to look at the pre-market data as well, and because we know that crypto is correlated to the US equities. The Dow Jones is flat. We've got the S&P opening up flat on the futures and 0.4 down on the Nasdaq. So we have to keep an eye on this. The key mover today for the markets is going to be the non-farm payrolls. Around lunchtime in the US, they get the non-farm payrolls, and we need to look out for this data, because this data came in at 390,000 in the previous month, in May, and expecting June consensus to come around 270,000 jobs. Now, if it comes in any less, the market will be spooked. If it comes in too much higher than that, the market will be spooked as well. So it's a double-edged sword. You can't win, you can't lose. The economy doesn't want to go into recession on the one end, losing loads of jobs, and the economy also doesn't want to be overheated labor market where jobs are ample, where wages are increasing and inflation therefore is increasing as well. So very important to keep an eye on this, as Jerome Powell will be using this data plus the June CPI data he gets on July the 13th next week to inform his decision at the next FOMC meeting. All the things that are going to play into whether this rally can continue. Now, let's come back to this rally. And what can we see here? I'm just going to switch over to the 4-hourly candles just to remind you guys of the wider patterns at play. And you can probably see it now. It's quite obvious what we've got here. So we were in this symmetrical triangle, and we got the breakout here, which allowed us to take the trade here. But now what you're looking at is a new trade. So if you ignore the triangle for a second and focus on this W pattern, or you can argue it's a bit more of an inverse Adam and Eve, because this is more curved, right, than it is a proper sharp one like this. Either way, it's the same concept. It's a reversal pattern. It's a double bottom type pattern with a neckline at this green line of 21,943. Now, what's the significance? Well, it's no coincidence that we had that neckline drawn there, and look exactly where Bitcoin started to get rejected. Okay, so you can see Bitcoin now getting rejected here at this neckline. But this neckline is a really, really important level to break. And I'm going to explain why. If you can get a successful break from this neckline, and we were to take the measured move from the neckline down to the wick there, and you put this at the point of the breakout, I'm going to show you guys where this potentially could take Bitcoin. This rally could take Bitcoin up to 26,000. So I'm staying in it just to see if we can get that breakout. So I was going to stay in the trade. If we get a clear break of this neckline, I will be laddering in my position. You guys can join me on this trade using BYBIT, BitGet. They're the two exchanges I use. Links in description. Full disclosure, those are affiliate links. It does support the channel, but hopefully I provide value in providing these daily updates to you guys anyway, that you don't mind trading on the two exchanges, which I use anyway. And I use those guys anyway, and I wouldn't recommend them if I didn't. Now, what here? So if we look at the 4-hourly, there's a few things I'm looking at. And the main thing I'm looking at is we've had a nice flip of the 4-hourly EMA ribbon. And you can see we had a nice roar up, right? Which is what everybody enjoyed. Now, there's no issue with coming down and testing the EMA ribbon. And so if I zoom in here, what we can see is if we want to come into there and test that EMA ribbon, you've got plenty of room. I mean, even if it comes down to 20,800 again, I'm not bothered. I won't come out of my position. Even if it wants to come into its EMA, even if it wants to test the top of this symmetrical triangle at 20,200, and I know things get tight there, but that's perfectly fine. That could still provide a bounce as long as we don't lose the EMA ribbon, as long as we try to hold the EMA ribbon and bounce from it. That would be quite healthy, in fact, because it can mean our next move to break through the neckline could be quite powerful. So I wouldn't mind if we see something where it gets a little bit of a cooling off down here and then rockets itself back up through the neckline, and then we want to see what happens. Once you get through the neckline, again, once you get past and you post that higher high, higher than this high, what I then want to be looking for is, do we get that retest? Do we get the retest of the green line here? And can we work our way up and start working towards the target here? Now, if I show you the hourly chart, you'll see a similar thing. On the hourly chart, we've just come back down through those last couple of hours to bounce. Now, the question is, can we get that bounce now? Or does it want to go deeper into the EMA ribbon? If it does want to go deeper into the EMA ribbon, as that line suggests there, then that is what it's showing us here on the 4 hours, that it wants to call off further down than just on the hourly, okay? So either way, I'm pretty comfortable holding this trade for a little bit longer. Even if on the 4 hourly it wants to come down and call down towards the CMA, we're good to go still for that. Now, let's take a look at some potential positions where we need to start thinking about things, right? And what we can see, and I've made this very clear from the outset, is we are trading this trade against the trend. Okay, we're in a bearish stance, so you guys need to be super, super careful. You need to be really hot on taking your take profits, and when you're happy with your profit, just get it out, because you're going against the you're swimming against the tide, right? So at any moment, any of these trades can dump to the downside because we don't have the trend on our side. Now, that doesn't mean you can make a profit. Evidently, as we have over the last 24, 36 hours, we've made really good profit trading this. But you guys have to respect the wider trend, and anybody who doesn't and really jumps into leverage, jumps into margin on these types of trends, they are asking you to get wrecked. So play it sensibly. You can see we've got a nice breakout. We're fighting for this daily candle now to go green. And the reason you can start to see resistance is, one, because of the neckline, which I showed you, the green line, but also we're running into our daily EMA ribbon. And this is going to continue to act as strong resistance to the downside, okay? So don't think this is just going to be, oh, you know, we're clear, we're going to just run straight to the top. No, this is a very important level. And the way I can prove that to you is if I bring out the VPVR, the chart's going to get a little bit messy, but if I bring out this VPVR, you can see here, this is strong volume here. Now, as we're clearing this volume, which we're pretty much done now, we're clearing this level of volume, things will start to get easier. If we can get through this neckline, I think that next move here towards our 26 target is quite possible. The question is, what happens after we get to 25, 26 sort of range? I think we can go up here and potentially then get thrown back down at some point. So that's what I'm looking out for. Whether that throwdown is violent or whether we just end up doing something like this and going sideways, I'm not too sure. But I would be super, super surprised if we get above there and just keep going. Because if we do, and we do fill that gap, the maximum I can see us going to is 29,000 up here. See, because that's where we fell. We were sitting at about this 30,000, 29,000 level, and this fell very, very quickly. So the question is, if we can get past this level here to 25, 26, and we're looking strong, there's no reason you can't run to 29,000 to make up for this fall to the downside. Okay, so that's the range I'm playing with. Anything above 30,000, I'm not thinking about right now. I'm thinking about how can we take this long trade up towards maximum 29, 30,000, and then I'd want to be out of the position, taking my profits to see what is happening. Are we going to go sideways? Are we going to be thrown back down for our next low again? We'll have to reevaluate at that point. Right, guys, hope you enjoyed this quick emergency video on Bitcoin. If you're trading these moves on BitGet and BYBIT, shout out to you. Links in description. Get yourself set up using those bonuses. Trade safely. Don't use margin. Don't use leverage. Go watch this video, and I'll see you in the next one.